Hello, what's up guys? Today I want to show you why you normally lose all your trades, right? Sometimes you try to trade but you seem like losing all the trades that you're doing, and then you say that this thing is a scam. Yeah, I understand that, because if you lose like 3, 4, 5 or even 10 trades, then definitely you'll find that trading is a scam. Why? Because you don't know trade types that you're trading on, right? This is the only reason that you're losing all your trades, most of your trades, if not all, right? So these are the trade types of the synthetic indices, right? And we are working on the DERIV platform, right? So we have two separate trade types. Okay, so this is a simple trade and this is the complex trade type, right? There are only two trade types that we are working on the synthetic indices on DERIV, right? The simple trade types and the complex trade types. Be attentive, because if you understand this, then most of the time you'll not lose all your trades. So what are the simple trade types? They don't directly depend on the quality of your strategy and can't be analyzed using technical indicators and tick analysis, right? So with this kind of trade types, it is not dependent on the quality of your strategy, right? So that means there's a quality of your strategy when you're trading on in synthetic indices, more so the deriv.com site, right? So these are the Asians, digit matches and digit differs, even odd, under and over, highs and low ticks, only ups, only downs. These trade types do not require any strategy, right, or technical indicators for you to try to trade on this type of trade types, right? So like Asian, like digit matches, you can't use a technical indicator, right, and tick analysis to see whether you can get the digit match right or wrong, right? Even the digit differs. So what really happens on like digits matches and differs is that if you have put your trade to be ending with the 7, like that is your match, then you see, unless you get an end with the 7 here, right, unless you get an end with the 7, then that you will now have successfully taken that trade, right? So that means that there is no technical indicators that you can use to get a digit match, right? So digit match goes with the ticks, right? And you can't say that in the digit match you are waiting for like 5 ticks to get a digit match, right? So you can't, even odd, under and over, right? So this you can use other tools like knowing the percentage that has been there for the past 60 seconds or past 1 minute. Then you can try using that form of analysis to get whether you can get something over or under, right? So if you look at me, if you look at all of my trades, I mostly don't trade on this type of trades because I can't analyze. So I can't know where my money is going, right? So I can't know. You see, if you know where you're losing your trades on, then it will be good for you, because sometimes you need some technical analysis. Okay. Okay, so you don't know where your money is going, right? Sometimes it's good that you know where you're putting all your money on, right? So if you're trading on Asian digit matches, even an odd, so you can win all some of your trades, you can win all your trades, but you see, you don't know why you have got that money, right? So if you know where your money is going, then it will be simple for you to know which kind of trades types that you want to trade on most of your trades, right? So in other words, what I'm saying is you can decide to trade on simple trades, which there is no any technical indicator that is needed or tick analysis, or you can trade on the complex trade types here, right? I personally like the complex trade types because I know how to analyze the market, and this is the way forward. I'm going to show you how you can analyze the markets on complex trade types. Okay, so what are they? What are the complex trade types? They are directly dependent on the quality of your strategy, right? And can be analyzed using technical indicators and tick analysis. That's the only difference. This one doesn't depend on technical indicators and tick analysis, while the complex trade types depend on the quality of your strategy, that is technical indicators and the tick analysis, right? So that is what is happening over there. So the complex trade types are rise and fall, high and low, touch no touch, ends between ends outside, stays between stays outside, reset call put, right? So these are the only types of complex trades that if you know how to do or analyze your technical indicators and tick analysis, then there is more likelihood of scoring more on these type of trades than this, right? Because like even an odd, you're predicting that the end tick, right? Like this end tick will be odd, right? You see? Okay. And even an under, maybe it's over 5 or under 5. So does not need any technical indicators over there. So you can't analyze the ticks and use the technical indicators in order to know whether the last digit will appear even an odd or even under and over, right? That's why most of the time I prefer trading on the complex trade types, right? So I'm going to show you how you can use the technical indicators and ticker analysis to trade on complex trade types, and after that sometimes you'll never ever trade on under, low, or even an odd. Okay, and sometimes I even see some of the scammers sell bots that work on even and under, odd and even. You see, that is scamming you, because the bots that they're actually selling you does not need any technical indicators. But if you have any bot that have this kind of trade types, then this video will benefit you. In the Telegram group also, we have many bots that are trading on this. Okay, so these are the settings that we are going to use, and I'll come to these settings in a minute. Let's say, for example, so this is the technical analysis. Okay, this is how the market is moving currently at 9:08 p.m. This is how the market is moving, and you see, we are not going to use this one. We are going to use this kind is called area. Okay, this chart type is called area. Okay, so maybe let me zoom out. So you working on the area, so we are not going to use this kind of chart. we are going to use the candlestick, and the candlestick start from 1 minute, right? So you just come to this. So first of all, you go to app.deriv.com, right? app.deriv.com, and if you don't have DERIV account, there is a link in the description below. Just click that. It will take you to the page where you'll sign up with your name, your name, email, and password, and then you could start trading immediately. So there is a link in the description that will take you to this page. And in this page, maybe you normally use the smallest ones, right? You normally use the smallest one, right? Like this one, these charts, okay? Sometimes you normally use these small charts, and sometimes they load, sometimes they don't. So that's why I like using this, this chart, the biggest one. So which is app.deriv.com. Just write that down. App, yeah, app.deriv.com, right? So it will bring you to this chart, and then you choose the chart type, which is the candle, right? That is the candle. So you see everything has changed, right? So these are called the candlesticks, right? So you see how the market is moving, okay? This, you can see how the market is moving, okay? And you can go further, okay? You can even choose the day and the date and the time, okay? This is how the market was faring. And as per now, the market has reached this point, right? So we see there is ups and downs, ups and downs. So this is what we call candlesticks, right? So the blue, the green candlesticks, we call them the bull candlesticks. That are going up is called the bull candlesticks, while the one that are going down is called the bear candlesticks, okay? So what you should know is that the bull attacks upwards, right? If the bull wants to attack you, they'll attack you upwards, right? But when the bear wants to attack you, they will attack you downwards, right? That is what we call the bulls and the bears. So basically in trading, we only have two types of people. Those people who want to sell, and those people who want to buy. So those people who want to buy are called bull, okay? So that is trend is called bull. The trend of buying some form of instrument, that can be forex, can be crypto, can be CFDs, can be stock, can be commodities like metals and all that. Then if they are buying, then we call this a bull run, like this pay. If you see them selling, then it's called a bear run, right? So that is what we're going to use in this video, right? So after knowing what is a bull and what is a bear, and selling and buying, definitely you will know what you can do. So this is how now we're analyzing our charts, right? Yes, now this is how we'll analyze our charts. So this is the chart that we're going to use, right? So first of all, we have synthetic indices and markets, right? So for you to know what we have discussed here, rise and fall, higher and lower, first of all, before trading, you should know what is a rise and fall, higher and lower, touch or not touch, ends between, ends outside, stays between, stays outside. So that is when wherever you're now trading on these, you know exactly what you're trading, right? So because some people get bought and they start trading immediately, and then they lose money, they say that the bot is not working, Yeah, sometimes the bot is not working, right? But sometimes the problem, it is you as the trader, because first of all, you don't know what you're trading. You should first understand everything that you're doing on the market. But if you don't really know what you're doing on the market, then chances of you blowing your account is high, right? So you should know when you're trading on rise and fall, what does it mean by rise and fall? High and low, what does it mean by high and low? Touch, no touch. Yes, you should know what is this, right? So that is when wherever you're trading, you know what you're trading on, right? As opposed to these ones, you might know what you're trading on, but because you can't analyze the indicators on the tick analysis, then it becomes irrelevant. But if you have analyzed using the technical indicators and the tick analysis, and you know what trade types you're working on or you're trading on, then you lose, then exactly you can figure out where the problem was. Okay, figuring out where the problem was is the best thing to do, right? So first of all, I like the rise and fall, high and low, touch and no touch, and reset call put. I normally don't trade on these two. I'll just put them in red. I don't normally trade on these two. I tend to specialize on 1, 2, or 3 trade types, which sometimes is rise and fall. Okay, rise and fall, touch, no touch, and reset call put. Okay, so for you to have a knowledge and know what you're doing on the market, specialize with 1 or 2, right, trade type. If you specialize in 1 or 2 trade types, then you can understand that trade type fully. And you see, if you know something, if you have an education of something and you know it fully, then chances of losing your trade will be low, right? Because first of all, you know the trade types that you're working on, you know the nitty-gritty of the trade type, and lastly, you know how to analyze the technical indicators and the tick analysis of that trade. So wherever, if anything happens that you lose your trade, then sometimes you know where the trade is, you have lost the trade from, right? But if you come and you got a bot, somebody sold you a bot, or you got a bot from the group, like the one that you put on the group, and you start trading immediately, you don't want to know what am I doing. First of all, you should first of all want to know what you're doing on the market first, right? Because let's say, for example, you want to start a business and you have the capital, right? And then you just went to any other business that you don't know ins and out, and you want to get the profits immediately. You see, that can't happen. First of all, what you normally do, you do your feasibility study, right? First of all, you make your mind to know which kind of business that you want to do. And then next, what you're doing next is do the feasibility study of the area you want to put your business in. If it's online business, you should know which website or which type of business that you want to do online first. So what I'm saying is, you should know the nitty-gritty first of the type of the trade types that you want to go into before you decide to trade, right? Take even a week, even a month, just studying that kind of trade types. Okay, like when you go to school, first of all, when you're a kid, you go step by step, right? And then you reach the final of college and university and all that stuff. You see, you started when you don't know anything. So with this kind of trades, what we're doing on the synthetic indices, just like forex, just like crypto, you should know what you're doing first on the market. Because if you don't, then chances of you blowing your account every single day will be high, right? That will be high. So rise and fall, what I normally trade in personally is rise and fall, touch, no touch, and reset, call, put, right? I specialize mostly, it's not that I don't trade on the other, but mostly I tend to specialize on the same, right? Then if you specialize on the same, and if you know that kind of trade types, then growing your account to $1,000 and above, like I did here, will be easier. Very, very easy for you, right? Okay. So now we want to do technical analysis. Okay. So if I want to ask you a question, have you ever seen some traders having many monitors around them, right? They have like 10 to 15 monitors around them. Let me show you example. So let me show you type one, how the Forex or the trader do their analysis. Okay, let's come to this page. You see this guy? You see these people? What are they doing? Okay, what are they doing? What are these people doing? What are these people doing? You have like 10 monitors around them. What are they doing? What they're doing is they are looking at the charts, okay? And if they get that entry point, then they trade from there. They don't trade any day, any time, any second. No. What they're doing is they are doing some market analysis, okay? So this guy has over 5 monitors. Yes, 5 monitors. This one has 3. Okay, this guy has 3. This lady has like 3 and above. This guy has 2 plus. This guy has 6, right? What am I trying to say here? You have to analyze the market first. Okay, so you have to analyze these charts first before you trade, right? So if you analyze the market first and find the sweet point or the sweet spot of getting into trade, then you get into the trade, right? Because if you don't get into trade on the sweet spot, then you'll automatically lose that trade. Okay, let me show you an example. Leave alone the setup. Now what we are going to do here is use one setup, right? Like this, right? So what is happening is whenever you find that there is a sweet spot of getting into the trade, then you go into the trade immediately. You just go into trade anytime, any day, any second, right? But you have to look at the sweet spot of getting to the trade, and if the sweet spot presents itself, then you get into the trade. If the sweet spot doesn't get itself, you don't. That's why it is not advisable for you to get a bot and start running it immediately, because you don't know. Mostly when you're trading on this type of trades, right? This one you can do anything for this. You can enter the market anytime, anyhowly, right? Because you don't need any technical indicators to know whether the last digit will be over 5 or under 5, right? The last digit will be even or odd. It can happen anytime, right? So you don't have to analyze the market. But if you're using this, then you have to know the sweet spot of getting into the trade. And that is what I want to show you today, right? So we're going to set up this trade, and I'm going to show you how you'll use it on any bot that you have that is working or that is trading under these trade types, right? So first of all, we're going to set up our moving averages. Okay, So what is a moving average? You can just come to this site, or you can just Google it. So what is a moving average? Moving average helps to level the price data over a specified period of creating costs by creating a constantly updated average price. Okay, so it only finds supports and resistance. I'm on investopedia here. The
moving average is a technical indicator that refers to an average price for a particular trading instrument over a specified period.
You see, so that was the moving averages. I'll show you how it looks like. And we also have the relative strength index, the RSI, which is this one. So what does RSI do? The RSI provides technical traders with a signal about bullish, like the one we said, the bull trend, and the bearish price momentum. The bullish price momentum is when the price is going up, and the bearish price momentum is when the price is going down, and is often plotted beneath the graph of an asset's price, right? So that's another one. And the last one, which I like to use, is the Donchian channel. The Donchian channels is, what is the Donchian channels? The Donchian channel are 3 lines generated by moving averages calculations that comprise of an indicator formed by the upper and lower bands around the mid-range or a median band, right? I'm going to show you what these are. Okay, so we are going to set up these things, the settings on our table, right? So this is how our table looks like now. So if you go to this app.deriv.com, you just come to chart type and you choose a candle and you choose 1 minute. And 1 minute, that will depend mostly with your bot. Okay, your bot is 1 minute here. Okay, so now I'm showing you what you should do. First of all, go to volatility. If you want to trade with the volatility index on 101S, then basically what you're going to do on your bot, okay, settings that you're going to set here are the settings that you'll set on your bot. Okay, if it's trading on this type of trade types, right, the complex trade types that we've talked about. So your bot trades, like maybe your bot trades on rise and fall, right? Or let's take this example, rise and fall, right? So the volatility index is 101S, right? The volatility index here is 101S. So you're matching everything that is in this chart with your bot. Let me repeat that. We are going to match everything that is in the chart over here to the ones that you're trading on your bot. Okay, if you have set up the volatility index at 100 or 10/1, then your bot should do the same, 101S, right? Because the volatility index. So what do you know by volatility index? Okay, you should know what a volatility index is. So first of all, these are the volatility index that you're working on, right? 101S, there are 2 types. There is 101S and the volatility 10. So the one with the 1S, as you can see here, there is one with 1S and there is one without 1S. So what does this mean? That means 1 tick is generated after every 2 seconds for volatility index of this, right? Without the S. So 1 tick is generated every 2 seconds. But with volatility 1S, 1 tick is generated every 1 second. So one tick is generated after 2 seconds. One tick is generated after, this is 50. One tick is generated after 2 seconds. One tick is generated after 1 second. That is why you see 1S over here. So you should also know what that means. That means these indices correspond to the simulated market with a constant volatility of 10%, 25%, 50%, 75%, and 100%, right? Right? We are not going to jump indices, but if you want to know what jump indices, you can also go here. But I normally don't trade on jump indices. I normally trade on these continuous indices, right? So after knowing that, so this one trades with 1 tick 1 second, 1 tick 2 seconds. So if I choose 10 1 seconds, then I just come here 10 1 seconds. So my bot is going according to my chart. So when I execute a trade, then I will not get any different thing here, right? Because if the volatility, the ticks goes like this tick, let me just do, there is a tick that is going here. It's going after 1 second. But if I put here as volatility 10 index, and then my bot is 101S, then I'll be doing nothing, okay? Because anything that I set here will not be equivalent to what I've set here. Because what we are looking at is, we want to study this chart in order to trade with this chart using our bot. Are you getting me? That is how we do. So it's rise and fall. What you do here, rise and fall. So you choose rise and fall from these multiple trade types, right? So you choose, this is rise and fall, and this is rise and fall. Our volatility index is 101S. Our volatility index is 101S. Our chart is 1 minute. Our chart is 1 minute. Okay, so our chart is 1 minute. Our chart here is 1 minute. So if you put 2 minutes here, then you should also put this as 2 minutes, not 1, because we want to go according to this chart, how this chart is working. So let's put it as 1 minute. And so now we want to set up these things that we have talked about. So we start with the moving average. So just come here, indicators, you search here MA, which is moving average. This one, you click it once, okay? It appears here as once, right? Then you go to another one, right? Relative index, relative strength index. So you come here, RSI. You click once. There are now 2, okay? And you come back here, the Donkian channels, right? You just come back here, you write like Donkian, you just find it here, you click once. So we have 3 indicators here, and these are the indicators that we want. Now we want to set them up according to these settings over here. So when we come back, we go to the active, which are the 3. So the MA, which is the the moving average, so this is the setting that you're going to set up, 100 CM0, 100 CMA0. You choose the setting here, 100, this is the period, C close, 100 CM0, okay? So 100 is period, okay? C is close, MA is simple, that is a simple trade types, it's not exponential, and the offset is 0. So if you come here 100 CM0, we are done with moving average. So we are now done with this moving average. Okay, now we are going to next relative strength index 2C. We're going to set it up. Relative index is 2, that's period, and C, which is close. Done, right? So if we come here, is 2C, right? We have finished the second one. The last one is Donchian channel. The Donchian channel is 2020Y. Mostly you'll find the Donchian channel is just the same, 2020Y. But if you want to change it here, is 20 high period, low period is also 20. Okay, and Y is the channel fill, right? And you say done. So this is now there, the RSI 2C, and this, the line here is, the line here is MA, and this one here is the Donchian channel. This thing that is shaded gray inside it, all this is the Donchian channel. Okay, so I want to show you when now you can trade, right? I want to show you when you can trade. First of all, if you're trading like this, between this, you lose most of your trade, because the trade should go uptrend or a downtrend, you see. So this is now how you do your technical analysis. So normally you're required to trade when you're going up or down, right? Or down, up or down. But if you trade anything between like this, then you're going to lose your trade, right? Because it's not the best time in the market. Okay, like this place, you're going to lose all your trade, right? You're going to lose all your trades, some of your trades here. Yes, it's going up and down, but you see, we're not getting something smooth like this. Okay, okay, so these are our ticks. Okay, so you put a 5 tick here and this tick. So coming back here is 1 minute, right? Now in this one you can now trade, okay? But after analyzing this, so let's take for example, this is the Donchian channel. So whenever you see that the candlestick passes the Donchian channel, then you should start trading. Because what does that mean? That means that that this is an uptrend market. Okay, so as you can see here, there is 20 and there is 80 above, right? There is 80 and there is 20 below. If the market comes below this, okay, then you should start trading. Okay, like this. As you can see here, from here the market was down. Okay, this was a downtrend, or we call a bear market. So you see it went down up to this place. Okay, and this one went up from here up to this point. Okay, so areas that you are now supposed to trade are these areas, okay, that are over 80% or below 20%. Okay, so as you can see, this chart here, you could have traded this, like if it's now, you see it's now, we don't know where this channel is going to, right? That's, we can't trade here. So if we see that the channel is now uptrend, then we can trade there, and we only stay in the market for as long as we are still on this area, right? Unless the market stays on this area, that's when you're going to trade. But if it goes maybe down, like in this place, you don't know where it's going to, right? You don't know. But it's good to take all your trades when you have a bigger like this. Let me show you something here, like the bigger one like this. This one was a downtrend, right? This one was a downtrend. So this was the place to trade, first of all. Another one was here. I can't trade on this because I don't know where the market is going to. As you can see, it's going zigzag, so you don't know where the market is going to. So if it happens like this, then you're going to lose most of your trades because the market does not know where to go. The sellers wants to sell and the buyers want to buy. Okay, they haven't decided on the price of the market, right? So indecision, this is what we call indecision on trade. We call this indecision. But if these people are now buying, right, the sellers, I mean the buyers are buying. Now this is a bull market, so this was the best trade to trade. So as you can see, this one was like, if you see at this thing here, this thing that is moving, you'll find the times. So if you look at it, this was like 1353 to 1402. Okay, so if you had a bot, then this was the best time area to trade. Then you wait again, you don't trade because you're now analyzing the market. Or if you have another screen, you put this one as another screen, right? Then you come here. If you see something like this that is oversold, which is below 20%, right? If anything is below 20%, like this one is 80%, then below here will be below 20%, right? Like this one, 20%. Then what happens is that the market have been oversold, right? So you start trading here. You start your bot, okay? You start your bot immediately when you see this type. So then you wait again. So like this one, let's take for example, this one was from 7 p.m. from 5, no, let's take from 7 p.m. let's take from this time. So the trading times was 1, maybe 2, 3. No, this one was small. 3, this one is big, which is good. 3, A4. Now you can try this one, but what I couldn't go with there, I can't go there. 4, 5, 6, 7, 8, 9, yeah, 10, maybe 11, okay, 12, okay. So if you analyze the market like that, then you will lose, but you can't lose more trades than if you don't analyze your market. Because sometimes if you get the bot and you start running it immediately, then sometimes you may be running it like here where there is an indecision, the zigzag. Okay, avoid the zigzags here. It's either is a bull run or a bear run, like this. This one was a good bear run. That's why you see that most we're getting most here, because this was a downtrend, because it's out, the thing has come out of the Donkian channel. So that is how you do your analysis. And if you like this video, smash this like button and turn on the notification bell, and I'll also see you in the next video.